the reality is some of these knee-jerk reactions, I think, could be misleading relative to the fundamentals. Because what investors are looking at here is, what does demand look like for the AI revolution? And look, Intel has become a huge barometer. And you combine what we saw from Intel with the hyperscalers, that just gives you more confidence to what we're going to see over the next week relative to CapEx, enterprise demand. I think that's why it's very easy for investors to get caught up sometimes in what the stocks do, a day after. But for Intel, I mean, they've almost become the comeback kid.
They have.
They definitely have. With a big helping hand from the U.S. government, of course.
And NVIDIA, yeah.
And NVIDIA. Okay, so let's talk about the hyperscaler earnings that are coming up next week. Alphabet, the knee-jerk reaction there was to sell it off yesterday, down almost 7%. Today, it's making a little bit of a comeback, stabilizing up 0.2%. We've got Meta, Microsoft, Amazon, all reporting next week. Are we going to see a similar kind of outcome where they're going to increase their CapEx and the return on investment, through cloud sales, for instance, is going to show that they're getting some payoff, but investors' bar is so high right now that they're not going to be rewarded for it.
Look, and I think the Alphabet reaction, I think that someone would say maybe head scratching, because if you saw the cloud growth, you look what they're doing across the business, and then of course increasing CapEx. But as we've talked about, this is an arms race. It's third inning in the AI revolution. Microsoft, Amazon, Meta, no one's going to slow CapEx. Because you slow it down, you get ultimately, you're out of the line in terms of when it comes to capacity. I think the most important thing relative to tech earnings, to the market, to these stocks is demand accelerating? Our enterprises toward what ultimately is going to be monetization of use cases. And in terms of the reactions, look, I think we've seen, I think investors are definitely fickle and worrying about, we'll say maybe patience wearing thin. But guess what? Let's say Alphabet said, we're cutting CapEx.
Exactly. The market would freak out.
So that's why it's one where these companies are doing but they're not just spending like 1980s rock stars for no reason. Mm-hmm. They're spending because their customers are moving on the hyperscalers, on the cloud with AI. That's why they're doing it.
Sort of like you're damned if you do and you're damned if you don't, right? Because if you're not spending and keeping pace with the other big hyperscalers, well then what are you doing? But if you're spending a lot, they're still going, what are you doing?
But you're building out the Vegas Strip in 1955.
Great analogy.
Okay.
So the point is, you get one spot on the Strip. If you pull back, guess what? You're 2 miles away, you're in Reno.
Right.
And bottom line is, that's how these companies are thinking.
Okay, so they want to make sure they have a prime spot on the Strip, and that means they need to spend a lot of money. They also need to raise a lot of money. They've been doing that in the bond market. Are more companies going to do what Alphabet did and tap the equity market as well?
I think it's going to be a tidal wave. Now, in terms of I think it's also going to happen over the next 6, 12, 18 months, because the reality is, if they don't do it, despite whatever the stocks do, they know they're out of the game. Now, investors, how are they going to react to that? I would argue, if you look at Meta's last quarter was basically increased CapEx, dog ate the homework, they didn't show it. Alphabet, they are showing it. Microsoft, penalty box, prove me moving for Nadella. Each one's almost become idiosyncratic relative to how they're treated. Mm-hmm. But the reality is, investors are going from CapEx to monetization. That's the phase we're in, but it's still early in terms of as it's all playing out. And for the first time in 30 years, the U.S. is ahead of China when it comes to tech.
Apple's a different animal from the other companies we were just talking about. And every day I feel like they're saying we're going to revamp another product in our lineup, again, geared towards AI. So what can they possibly say that's new when they come out with earnings next week?
Look, for Apple, they finally now have an AI strategy. It's not just talk. And we talk about, we saw at WWDC. It's not Anthropic. It's not OpenAI. They don't need to be that, because they have the install base of 2.5 billion iOS devices, 1.5 billion iPhones. For them, okay, it's really about giving investors an update on the deployment of the AI strategy, and then giving some sort of sense in terms of what this iPhone 17, it has been a surprise upgrade cycle. And I think that's something you saw it even on the AT&T numbers. And it's very important for this broader market. The stock, what's happening to the stock, investors are realizing Apple is basically, they're going to be the toll collector
Right.
on the consumer AI highway, no matter which way.
But do we need a foldable Apple phone? That's my question, Dan.
And again, Keen's talked about that, and I think, I know he's waiting for it, but I think it's going to come
It'll fit
probably
in your
next
pocket
year.
better. It's not going to fall out of your pocket that way.
Okay.
It'll be bulkier, but it won't fall out.